Welcome to Common Sense Investing. My name is Cameron, and today I continue my journey in trying to find the next 10x penny stock. As always, I look forward to giving you introductions to good companies that also have the potential of being good stocks. Today I get to introduce and discuss some of the rewards and the risks of investing in Global Crossing Airlines Group Incorporated. You can't beat the experience. They have 18 aircraft flying in 61 countries to 347 cities. So if you're like me, why are you even watching this video? Because I've never invested in an airline before. Cyclical, low margins, many airlines have gone bankrupt. They're still going bankrupt. I have never invested in anything that had a plane before in my life. So in this video, I'm going to try to show you what's a little bit different with Global Crossing Airlines that might make them at least onto my watch list and maybe further. Now, before we go look at what makes Global Crossing Airlines a little bit different, this is their disclaimer that they want you to read. And of course, my disclaimer is always that I'm not a financial advisor. I'm definitely not your financial advisor. This is not how to invest. This is how I invest. This is just an introduction to Global Crossing Airlines, trading under the ticker, in most cases, JET. So from here on out, I'm just going to call Global Crossing Airlines JET. So why might I be interested in JET instead of a regular scheduled carrier like Delta? Well, the main thing is that JET flies after the passengers have been arranged. So whether you have 150 passengers paying for the plane and they split the costs, or whether you have one passenger renting out the whole plane, basically every flight is full. They simply don't leave until everything is booked. Passengers pay by the block hour, right? Whereas a regular airline is basically looking at filling the plane. And if they don't fill the plane, then they have a loss incurred by vacant seats. So they are arranging for flights before finding passengers instead of after, like JET. So to help explain this, we have block hours, which is what JET does, versus airfare, which is most other airlines, right? So an aircraft that is currently in Miami, Florida, will transport a group from New York to San Francisco and back to New York one day later. So with regular airfare, basically the airline sells an individual ticket at a variable rate for each leg of the flight, and basically the passenger only pays for the time that they will be in the aircraft. If the plane isn't full, they might lose money. For block hours with JET, it's a little bit different. Basically, the airline sets an hourly rate for the use of the aircraft beginning at Miami, where the plane is located, all the way to New York, and then all the way to San Francisco. And the passenger pays from the time the aircraft departs Miami to its return to New York, including overnight in San Francisco. So all the time of the plane, not the passengers, is what you're paying for. And digging even a little bit deeper and a little bit more complicated, JET offers both charter business and ACMI business. So what's the difference? Well, with charter, JET provides more things. They provide the plane, they provide the fuel, they provide the staff. Basically, they do everything. You get in the plane, everything is taken care of. Now, you pay more for that. The other thing that JET offers is the ACMI business, which is almost like a rental of the plane. So basically, the customer is paying for the fuel separately. They're paying for the insurance separately. There's a lower cost to JET because the passenger assumes all the fuel and labor risks. So charter, ACMI. According to their 2023 revenue mix, 40% of the revenue is derived from long-term contracts. 2/3 of those contracts are with blue chip repeat clients. You can see here a lot of collegiate sports, lots of them. Some concerts, some governments. They do some cargo, also some airlines. Those are probably the ones that are renting a plane when they need it, and then broker and tours. So lots of different diversity here in their customer base. And that's all great, Cameron. That's what they do. But why am I interested today? Why am I making a video on Global Crossing Airlines JET today? Well, their numbers have hit an inflection point. So you can see their revenue, top line right here, revenue has gone up. This is quarter after quarter. It's gone from the 30s to the 40s in revenue to the 53s, 53. Now they're at 57 million in revenue. But more important and more exciting is their operating income is in the positive. Their net income is in the positive. Not a lot, $284,000. But that is quite the inflection point. After being significantly in the negative for a long time, this company finally has leverage. Potentially, this is just one quarter, to actually start being profitable. EBITDA, $3.9 million in the positive after a long time of negative. They do have a new management team that recently eliminated a lot of expenses for this year. So that's potentially why they're, of course, at this inflection point right now. They're expanding their fleet by 40% by the end of 2024. Their goal is to have 20 aircraft. They say they might only hit 19, but 19 to 20 is still pretty good. They're changing to that plane rental business a little bit higher margins, and as well as the risk and the reward of investing in Jet right now, in my opinion, because every company, every stock has risks, and you need to make sure you go look at those risks and understand them. Their largest competitor filed for bankruptcy in 2024. This is why I do not usually invest in planes. It's a very hard, very competitive, very low margin business. So there is revenue here up for the taking for Jet if they can grow profitably and not go bankrupt like some of their previous competition. So there's a lot of things to like here. There's also some risks you need to be aware of. Current ratio, for example, probably one of my biggest risks, right? Total current assets, $19 million. They got about $8 million of cash, but if you add up the total current liabilities, $51 million. So that's a lot. However, again, you have to keep in mind this is airlines. So they do have higher than normal accrued liabilities and current portion of long-term operating leases for leasing the planes. So these airline companies are always walking this tightrope of, bankruptcy versus success. And if they get it right, they can make shareholders a lot of money. And if they get it wrong, they struggle. According to my numbers, and again, not financial advice, make sure you go out and research this company and form your own numbers, because this is speculation into the company's future. And they use EBITDA, not EBITDA. But looking at my numbers that I formulated myself, I think by about 2026, this company has a chance of being probably a $3, $4, or $5 stock. Coming soon, probably in December, I'll be working on videos to show people how I value microcaps. A little bit more explanation there. And if you'd like to learn right now and get a jump start on everybody else, I have a paid Patreon now, about 160 people strong and growing. Absolutely love all the conversation in there. Thank you everybody for joining so far. But please keep in mind the valuation for reward potential, even using some conservative numbers, means the company needs to execute and continue to execute. And that means finding these planes, finding them at good prices, making sure they understand their financing, making sure they can make enough money to continue being profitable, and then grow to their target. Because their target so far in 2024 was 20 planes. They currently have 18 planes. So they are getting there. I can't wait to see what they announce on their Q3 numbers. And of course, by the end of 2026, they're saying potentially 35 planes. If they can do that and continue to do that profitably, then Global Crossing Airlines more than makes my watch list. I can't wait to continue watching this company and see what they do in the future. So let me know what you think and whether or not Jet is going on your watch list. My name is Cameron. You've been watching Common Sense Investing. As always, thank you for your time.